Hi there, it's Austin Towne with Remax, sitting down with Deryk, one of the co-founders at Thrive Mortgage. What is your thoughts on going variable or fixed when it comes to a mortgage right now?
Huge question currently. We're in interesting times, of course. We're in an interesting rate environment. Everyone's situation is different, so there's no straight answer for everybody to follow. The best thing that I can do is provide a bit of feedback on both products. The benefits of a fixed rate are that you know what you're getting. You know what your rate is, you know what your payment is for the duration of your term. In my opinion, that is the only benefit, as currently fixed rates are not overly competitive. That is the only benefit in going with a fixed rate at this moment. Of course, it takes away the risk of rising rates in the variable. Some of the flaws in the fixed rate product, most people take a 5-year fix, and I don't think anyone really knows why. Most people actually break their mortgage around the 3-year marker. That's a Canadian stat. If you're in a fixed rate, one of the biggest flaws is that you can trigger a massive penalty if you're trying to get out of that mortgage early. Of course, most fixed rate products are portable if you qualify to do so. It doesn't always work. The other potential flaw in a fixed rate mortgage is that you could be committing to a much higher rate than you need to, depending on what variable does. Again, that's the risk. Variable, on the other hand, is a much more flexible product in regards to penalties. The penalties are only 3 months of interest. So on a $500,000 mortgage, we're talking $2,000 to get out of that. So that is a penalty that is never going to restrict someone from doing what they want to do in regards to potentially refinancing, selling and buying. That is not a cost that's going to stop somebody from moving forward with their goals. Currently, variable rates are dramatically lower than fixed. They're roughly 1.5% difference. For that reason alone, I would say that 90% of the clients that we work with have chosen to go variable with the mindset and the hope that when variable rates and the Bank of Canada continue to increase, that they're not going to eclipse another 1.5%. The best way to look at this is if rates rise by 1.5% over the course of 6 months, 2 years, that we don't know, we are going to land at a rate that is similar to the fixed rate today. And in my opinion, that is a win because we have saved money every single day while rates were climbing, and we're landing at the same point as the fixed, but in a much more flexible product. Of course, the flaw and the con in the variable is that rates can and will go up, and they could go to a higher point than anybody expected. I do believe that the variable is the best suited product, especially for my personal situation, because of flexibility and the difference in rates currently. I think that if we were in a market where the rates were much closer together, it's a different conversation.
Yeah, and I think the prepayment penalties is a huge thing to factor into that decision, because I've seen that firsthand stop people from being able to upsize when you get hit with a $20,000, $30,000 down or prepayment penalty.
It's massive. I had some clients that were forced to pay $59,000 last year. And this happens weekly, right? So it's something to consider. I do tell everybody that if you're planning to go fixed, try to partner yourself with a good lender. Typically the big banks are going to have the highest prepayment penalties out there. And you don't have to take a 5-year, right? If you're not sure if this is a forever home, a 3 or 4 year fix is probably a better bet, just simply based on stats.
So if you guys have any other questions, don't hesitate to reach out to us.